So Nvidia is about to release earnings in about 8 days from now, and I considered reviewing the different items that management guided in Q2 to understand where are the expectations and what are the key items to monitor in the next earnings release. So let's start with the first one. GAAP operating expenses, the CFO guided 5.9 billion in Q3. And of course, this is mainly driven by the higher compute and infrastructure costs, higher compensation and benefit costs. But I really think the main one is the ramp of the GB300. So that's the first one. OpEx, I don't think is really that important. What's really important is the GB300 because the company guided that there's going to be widespread availability of the GB300 instances in the second half. I don't see any hyperscaler, raising the flags saying that they are constrained by chips. So GB300 production shipments started in Q2, and they're likely ramping now in Q3 and then in Q4 this year. I will look at any comments in regards to the transition. So far, the transition has been smooth. So you can see one of the comments here. Colette, she was saying that the transition to the GB300 has been seamless for major cloud service providers due to the shared architecture, software, and physical footprint with the GB200. So, that makes sense. And I don't expect, to see, a bottleneck on transitioning from GB200s to 300s. And in any case, most of the hyperscalers, when they buy the GB300, they don't upgrade from the GB200 to the GB300. It's usually a purchase that's made in addition because the GB200 was released last year and it's not enough time for those GPUs to degrade in terms of performance. So I don't think that, it's going to be an issue in regards to transitioning from one family to the other. Now, the production, as I said, is going to accelerate. This is another guidance for Q3. So the current expectation is for factory builds in late July and early August. The company says that was successful, and the rate was approximately 1,000 racks per week. So the idea is that they will, there we go, Blackwell Ultra is ramping at full speed, and the demand is extraordinary. That was one of the people in the conference call. All right, so GB300 is going to be an item to keep an eye on. Moving on, we have gross margins. This one is key. People are paying, I wouldn't say a premium on Nvidia because it's not an expensive company. I think it's trading at about 40 times earnings. Next year earnings. Let me just have a look at valuation ratios. 42 times next year earnings. I mean, cheap, like it's unquestionable, it's cheap. So because of that, it's not, I wouldn't say it's very expensive to the point where the market is going to sell off if they miss on, on gross margins. But I think this is going to stay elevated. So the current expectation is for 73%, low 73%. In Q3. And the reason is because the lack of GPU sales to China has actually a positive effect on margins because those GPUs, they have a lower margin than a GB300. And because of that effect, usually sales to China depress margins. So if, and I don't think that happened, but if Nvidia actually made sales to China, this is a risk. I will keep an eye on just in case we have a nasty surprise on gross margins. Now, in regards to the H20, as I said, the company didn't consider revenue of the H20 chips to China. However, they said that if the approvals go through, the projected revenue is between 2 and 5 billion. Not bad, and it's a nice upside, but as I say, there is a big risk here if the company is taking into account these sales. Maybe they're going to miss the gross margin target for fiscal 2026, which is mid-70s%. So something to look at, because if sales in China resume, that guidance could be downgraded. Now, the reason why the company didn't resume the sales, even though the US government began reviewing the licenses for the H20, is because the USG, so US government officials, have expressed an expectation that they will receive 15% of the revenue generated from H20 sales. But as of the last earnings call, the government didn't publish a regulation codifying the requirements. In other words, it's just a verbal deal. It's just a verbal, a verbal statement saying that I want 15% of your revenue. Okay, where is the terms? Where are the terms? Where's the paper? So that's one thing to look at. I'm not really worried about H20 sales to China. In fact, I would rather not see any sales because I'm very worried about margins, particularly this item right here. So non-GAAP gross margin expected to exit the year at mid-70s level. Sorry, to exit the year. So that would be the end of the year, not the end of the fiscal year. I don't know, mid-70s, it's doable if all the mix is concentrated in the Blackwells, in the GB300s. But if, I don't know, if they book some of the H20 sales to China in Q4, this is at risk. So something to look at. Moving on, non-GAAP operating expenses are likely to be approximately 4.2 billion in the quarter. Well, we saw earlier similar value at the beginning. So this is GAAP operating expenses, and that's non-GAAP operating expenses, 4.2 billion. Both figures matters, both GAAP and non-GAAP operating expenses. So that's they're growing. So initially, the guidance in February was that operating expenses for the fiscal year were going to be in the mid-30s. That's the growth, okay, in the operating expenses. Now it's high 30s. So I'm just worried that if they say now it's going to be low 40s, I don't know. There is a little bit of a risk here. And you can see that, the mix of OPEX is mainly R&D. We have sales, general, and admin, and mostly it's R&D. So yeah, the Vera Rubin and the Feynman later on, I'm not sure if the company is spending a lot of money there and whether those costs are controlled or not. So I don't know. I will keep an eye there. Yeah. So the company noted that no H20 shipments assumed in the outlook, implying continued elevated development and go-to-market spend. All right, that's fine. And as you can see, these expenses are increasing each quarter. So last quarter was 8% on a non-GAAP basis. All right, Rubin. So this is one of the main items. Rubins are in fab with Taiwan Semiconductors as of the last quarter. Rubin remained on schedule for volume production next year, which is good. That's a reiteration, so that's positive. And this will be the third generation of rack-scale supercomputers, with a mature and full-scale supply chain. It seems that they are on track for annual product cadence, okay, which is good. And I think Jensen Huang made some remarks. The reason we are on an annual cycle is because we can do so to accelerate the cost reduction and maximize the revenue generation for our customers. In other words, the advancements are faster than the deployments, which means that the hyperscalers have to be careful with their capex, because if they buy too many GB300s, they're giving up on the revenue on purchases of Rubin. So it's something to consider. I'm not sure whether the upgrade to Rubin is going to be as aggressive because the GB300s are good. So that's a risk next year, but well, we'll see. We'll see how things develop. Sovereign AI. All right, the latest guidance is that this item is going to surpass 20 billion this year, and that is going to double compared to the last year. So this is a very interesting guidance. Countries, it seems, that are adopting AI And yeah, well, I will keep an eye on what's going on with this item. If they upgrade the revenue that they expect this year, well, even better. Speaking of revenue, total revenue is expected at 54 billion. Sequentially, it's a 7 billion increase in growth. And overall, I'm quite happy with the growth rates of Nvidia. So I don't think that we're going to see a disappointment either compared to the street expectations, which, we can actually see it here. So earnings, estimates, quarterly. The street expects $1.25 for EPS, which is a 54% year-over-year growth. And on the bottom line, on the top line, we're talking about a 56% year-over-year growth for revenue. So you can see the rates. It's crazy to grow that revenue at that rate. It's not an easy feat. So not bad. And looking at Taiwan Semiconductor in Arizona, there are fabs that are expected to reach volume production. And I believe that could be related with Rubin. Possibly because, as they said in the last quarter, they said they have 6 new chips that represents the Rubin platform, and they have all been ticked up at Taiwan Semiconductor. So they have been essentially taped out. And it seems that Rubin remains on schedule for volume production, which, good. If they delay this, no good, because AMD has the MI400, and that's not the best news when it comes to, from a competition perspective. Great. So these are all the items. You can check them on Guidance Terminal. I'm going to leave a link in the description. Let me know if you have any comments. And I hope to see you in the next one.